Hey guys, Mike here. So what an interesting day in the market. And like I said yesterday, gonna be volatile, and boy, was it, right? We got PPI data that came out today and stuff. And I mean, the one thing you're looking at here, I'll tell you what, when it comes to CPI in general, which I'm gonna show you, and we talked about before, is can the Fed slow this part of the economy down, right? It's like a scientific experiment or something. And so far, I'll show you, I mean, maybe they're starting to do it, but they're having a huge problem trying to do this. Plus, I'm going with some data. I told you I always keep you updated on this channel. Do what you want to with the information. But, you know, again, this is something we'll keep an eye on because it is starting to tick up, right? And this is definitely going to affect the economy, especially come October, November, when student loans kick back in. Just wait, all right? And I'll show you why, as I told members, it will absolutely will affect consumption and things of that nature. And then I'll go some charts with you, but I'm also going to tell you, if you're not learning to do this, you're just basically giving away free money, I guess is the best way to put it. So I'll cover that in this video if you want to hear about it. Now, right here, guys, I'm telling you, look at this right here. So when it comes to CPI, when it comes to commodities, you know, look, way down there. They've crushed that, no problem. The Fed has, right? Raising rates, tightening, whatever. But look at what's going on with services. I mean, it's finally ticked over a little bit. But, I mean, you got to go back to the early 90s, going back to the early 80s, the 70s to see this level, right? I mean, they just hadn't had hardly any kind of success pushing this down. And can they? We don't know yet. I mean, they said they don't even know, to be honest with you. They're shocked of how we're still holding up here. But, you know, why we're holding up is simple, right? I know we hear all the bad things out there, but this takes us through the second quarter, right? This is delinquency rates, right? And what are you not seeing? You really don't see a lot of ticking up on a mass scale at all. Right? Like, I mean, that's 08, obviously, that's that's huge. But, you know, you're not seeing a big tick up at all in any of them. And, you know, but now when you look underneath the hood, you get a little closer, you know, then you get percentage of balances that are 90 days delinquent. This is the big one, but this is a percentage of balances. And again, you're still ticking down. Okay, and you see obviously student loans hadn't kicked in yet. This is what I'm telling you. October, November, I think you're going to see a whole different chart come out for the third quarter on this. This takes us through June. You can see right there, back in 08, you see it started ticking up like 3 years before you finally got the big collapse or whatever. I don't think it'll take that long for this one. But as far as percentages, you know, not a big deal right now. Now, when you look at transitions into 30 days delinquency, you're seeing a pop up. It's not huge, but you're starting to see all of these go up, right? And again, student loans have not kicked in yet. But when you look at auto loans, credit cards, revolving credit, so you got to keep that in mind, all right? Even the mortgages. So, you know, keep that in mind right there. Again, there's student loans not doing nothing. And then the big one, this is the one to pay attention to, transition into serious delinquency, which is 90 plus days, which means you're screwed, okay? That one's ticking up as well, okay? So all of them are starting to go up. Again, it's not this huge, oh my Lord, look at the big move up, but it's moving up, okay? And that's what we got to pay attention to. Now, the one thing is really going to affect consumption, and this is where it's going to affect the economy. And I mean, if it doesn't, I'll be stunned at what to see. But when you go over, you know, you got to think about this. I've told you who consumes the most, right? It's anywhere from 18 to 50-year-olds. Who consumes the least? 50 to 70 plus, right? So you look at debt share by product type. What's this big one right here? That's student loans, okay? Keep that in mind. That is student loans. It's either the second or third largest bill, depending on your age group. And you see 30 to 39. So anywhere from 18 to 40, look at that percentage. Almost 20% from 18 to 29. Almost, what is it, like 10 to 12% of 30 to 39. Even 40 to 49 has some as well. But understand, these two groups spend the most, especially the 18 and 29, because a lot of times they don't know how to manage money anyway, and they're just out there living life, right? But these two groups spend the most out of any of these groups, okay, especially when it comes to services and things of that nature. And they're starting out life, so if they're trying to buy houses, they're trying to buy, you know, furniture and cars and all this stuff and go on trips and blah, 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 and spend a lot on kids when they have them and all that good stuff. And usually 40 plus, you're actually starting to become empty nesters, things like that, right? And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And of course, with interest rates obviously being where they're at on credit cards and everything else, student loans, you know, it's going to take effect. The question is, how long? That's really what we don't know, right? I mean, it could take 6 months, take a year. We just don't know, because why? They still have jobs to pay the bills. They still have jobs to pay the minimums, right? And again, October, as y'all guys pointed out, which is true, they don't have to start paying student loans. They just let the interest run up on it, which is not good. But there is an out there. That's that same. It's not. I'm not gonna say it's government liquidity, but it's a government out to keep liquidity in the market, right? And so again, without 18 to 40-year-olds out there spending their butts off and running up credit cards, ain't much of an economy to talk about. Just keep that in mind. So, I expect these numbers to go up. Let me know what you think in the comments as far as delinquencies. When you add $250 to $500, all of a sudden, to somebody's debt or somebody's, another bill they got to pay, the money's got to come from somewhere. It just doesn't appear out of thin air. Again, it could go on credit cards, which could push the whole can down the road. So we'll have to see on that one. Now, one thing to pay very close attention to that happened on the SPY today. Understand, obviously, this thing hits. The 50 moving average been holding on. It's got that gap right there. It didn't completely fill it, right? So just keep that in mind. And, if I pull this out, if I just draw a trend line, which I had in here, I took out, but I'll put it back in. Technically, that's kind of the third touch, right? So 1, 2, 3 touches right there. And so, we'll see if this breaks down. But the real reason you could see it break down, and it don't mean it's going straight down. Again, eventually you always get this bounce back, right? So you've had a lot of red days, a lot of volatile days, things of that nature. But keep in mind, we're only down 3.23%, by the way. It feels like we're down way more than that, but we're not, right? A lot of stocks are. But understand, you had your 8 and 21 EMA actually cross. And when this happens, you can see when it happened here, you get a sell-off. So you normally, anywhere from 4 to 7%, somewhere in there is what you normally see once you get that cross. So again, keep that in mind. So that should make sense, because what are we in? We're sitting here in this weakened area and stuff. But again, but keep in mind, you are going to get bounces. It's going to happen, okay? At least normally it does. Again, though, this trend line right here is about 5% down from where we're at now. That's just a trend line I drew. Let me try to go to the weekly here and you can actually see what I'm talking about. But that just goes way back. And we've had many, many, many bounces off of it. I think it goes all the way back to 08 if I'm not mistaken. And so it's been well respected. If it got down to that trend line and bounced, that would put us down around 8% and probably 12 on the Qs maybe. And so that would make sense. Speaking of the Qs, it's sitting right there on that trend line. It's broke its 50 now. Got below that 370, 372 area, which was trying its best to hold on to today. And so, keep this in mind. The 100 and the 200 are way down there. And so, again, we'll have to keep an eye on that one. Tesla, again, this falling wedge bounced right off of this falling wedge. So it respects this wedge right here. It started going to a gap fill again, bounced right out of it. And as I told the members, when I looked over here, you can see right here this morning, I was like, hey, got to bounce. Let's see if the MMs or market makers, what they have in store for us and stuff. But you can see to the penny, it bounced off that trend line and came up. Okay, so still in the falling wedge right here, trying to fight its way back up. But again, like I said, it's weak right now. And understand, this is what I'm talking about when I say you're giving away money if you don't know how to do this. Like, learn to sell covered calls and cash secure puts, guys. Again, Tesla, for example, if you think it's gonna skyrocket from here, obviously you may want to buy stock, but you can also sell. If you don't want to buy anything, you can sell a put. And if it's skyrocketed up, you're doing good. You're going to get premium. I'm not going to go into detail on this. It's going to be a long video, but you're going to get premium. It's going to go up fast. That's going to do great for your option. You can close it out early. You may not get all the premium, but Tesla is one of the most well-paying stocks you can get out there as far as premium. All right, add 2 zeros to this number here when you see this, because it's 100 shares, right? But you got to have the money in the account in case you get a sign. But if you think it's going down, as I told the members, I'll say you think it's going down to 220 or something, and you sell a put, right here, 220, what is that? September 29th is when it expires. Well, you get $625 out the gate. If you get assigned, you get to keep the $625 to put towards the shares, right? So you're basically getting in around 214 roughly. So just kind of keep that stuff in mind, or you go lower. You can go out to October and everything else. But, it's basically, I can say it's free money, but, if you like Tesla, get somebody to pay for some of your shares. So, again, look into that. There's plenty of videos I've done, like videos, and share what videos I learned from with the members and stuff. So just keep that in mind. Now, NVDA, still showing weakness, broke its 50 a couple of days ago. This right here is just waiting on earnings, right? Mark that date. I think it's August 23rd. And so, boy, semiconductors, I think this could bring down the whole, obviously, I think we know it could bring down the whole semiconductor sector if it don't do what it's supposed to do. But I think that's what people are waiting on, but it is finally showing weakness there. AMD, we talked about it. It broke the 50, it broke the 110, it broke that trend line, and now it's trying to break out. this formation here. It bounced off the 100 right there, as you can see. But again, we've been talking about this. Don't be surprised if you get to 102, 103. Might not make it, but it is showing weakness. That AI pump, has ended. That's what happened. That's why this is just continually showing weakness, okay, off that AI pump. And then you got BABA, and what I tell you, almost gave back all its gain it's got on the earnings. That golden cross don't mean anything, okay? I try to tell people that's why people pumping that online. But understand, same thing. You got more stuff coming out of China here, and you can see with this chart, new loans reached 345 billion won in July. The People's Bank of China said on Friday in less than half the 780 billion won economists had forecast in a Bloomberg survey. So you can see that is not good. And so, the credit expansion, it said, it's a big miss, and it worries people. Okay, it worries people a lot. And you can see what else come out. Again, this property issue they have over there, Country Garden comes out. Basically, they apologize and say, "Oh, we're so sorry for what we did. We pledge to solve the liquidity crisis." Basically, a penny stock now, from what I understand. And so again, that's got people spooked. It's got investors spooked. When you can't get investors coming to your country or they're pulling out, it's not a good thing. So, just keep that in mind. That's why all the Chinese stocks got hit again today. If China can get out of their way, you can see the stock go up. But unfortunately, right now, it just keeps getting these news presses out every single day, it seems like. Now, I will say one thing that might just keep this market up is where else you're going to put money besides in our bond market or in our stock market, right? And you can see right here, this is over in Saudi Arabia, and their stocks see the largest net outflow because they're worried about economic growth there as well, right? And disappointing outlook for the banks and stuff. And so people started pulling a lot of money out of there. So you got people afraid to go to China, afraid to go here. And this is just one of those things I'm bringing up because we saw it from like 2010, 2020, right? There's only one game in town. That was the American stock market, so to speak. It was China and all this other stuff. But the bond market sucked. All those other things sucked. So everybody just kept piling in to the stock market, right? And here you look around the globe, and hedge funds can't hold cash like we do, right? Not a lot of it. And so they have to keep constantly trying to invest this stuff. And you're looking there and you're like, not looking good economically over here, not looking good economically over there. And you're like, where are we going to put this money? And so, you look in treasuries or the U.S. stock market, right? And so it could be one of those things that helps just keep it afloat. They need to put this money somewhere. That's why they stashed it in those big mega caps that have hundreds of billions in cash, right? And so it just, you look at it, just keep going up and up and up, and finally they're starting to sell off now, which is why you're seeing the market come down. But again, when is their pound of flesh met before they start piling back into them? Right, because those are the safest havens, so to speak, almost on a global scale. Because as long as central banks around the world, and some of them did it today, keep their rates higher than they've been in a long time, right? And some of these other places got way bigger inflation problems than we got. China's got a deflationary problem, right? Again, just keep that in mind. So when you're sitting there going, if the stock market starts turning back up, let's say September, October, it's probably more October's, but if it did do that, and you go, what the heck's going on? Even if economic news is bad, like, the money's got to go somewhere, right? The hedge funds cannot just sit in cash, and they may keep buying treasury. They're buying a lot of them, right? And so, just keep that in mind. One thing I will do tomorrow is come out with a video. I really give it a shot because I always get you guys. I mean, it's just a lot of comments and stuff, a lot of questions in the comments, maybe some stories in the comments you want to share. So tomorrow I'm going to put a video like that, answering questions. And some people put something in the comments that are just, they're not correct, and so I'll go ahead and just show you the data and say, no, this is not good. But I also want to show, a couple of inspiring stories. Honestly, there's some really good stories came out of that. And I shared my story, you guys shared your story, and inspiration is needed more than ever now. Is what I tell people. I mean, seriously. And so I'm gonna put that out there for you tomorrow and stuff. Let me know what you think. Feel free to comment. Feel free. I'm actually going to ask you guys questions because some of them I don't know the answer to. So maybe we can get the community together and answer the questions. Okay. So anyway, hope you guys got something out of it. Again, I'll do that one. Also do the Sunday video to set us up for the week. Don't worry about that. We'll have it all good to go. And I'll see you tomorrow. Appreciate it, guys.